Hi, Jonathan York, Web Financial Partners, looking at investment markets. The US market got another little boost again, with CPI coming in at 7.1 versus expected 7.3. So again, that shows a clear direction that inflation appears to be on the sort of downward path now, and potentially we've seen peak inflation. That obviously has some major implications for the Fed that's meeting later this week. After recent commentary that came out of the Fed, potentially they're looking at now reducing the size of the increases. So maybe we've seen the last of the 75 basis points hikes, and potentially we're looking at a 50 basis point hike now. Now that's certainly given equities a little bit of a boost because really they've been beaten up pretty badly this year, especially the big tech companies. As Amazon has lost around 50% of its share price, Apple's down around 20%. And Facebook, probably the worst performer, that's down over 70% over the course of this year. Also been a pretty rough year for fixed income as well, one of the worst years since 1970. But now looking like we've seen peak inflation, potentially, as I say, once that starts to get below 7%, just maybe that the market will get back to a more sort of normal sort of footing. And obviously we've still got a labour shortage. Also as well, what's helping, potentially as well, the sort of reopening of China now that they seem to have abandoned their sort of zero COVID policy. And what's really interesting as well is that benchmark, 10-year interest rate around 3.5%. Now, if you remember, sort of a couple of months ago, that's trading at 4.25. The fallout from the crypto and FTX continues. It really does seem as though it's got quite a way to run yet, and it's just going to be interesting to see how crypto sort of fares over the next sort of 3 to 4 months. Because obviously there's quite a bit of scrutiny there, and potentially we're going to see more regulations coming through now. Now oil's bounced reasonably well from sort of 70 bucks now, currently around sort of 75 and change. Now in the UK, potentially they're facing a sort of, a major sort of winter of discontent. That's been further sort of hampered by, some pretty poor weather, freezing conditions in the UK, snow across most of the UK now, and that's just adding to the sort of, discomfort being felt. Also, as well, still a bit of a fallout from the sort of pension fund debacle, where the Bank of England had to come in, really support the market for fear that many of the sort of bigger pension funds could really collapse. Again, in Europe, some pretty encouraging news. German factory orders are actually up again, plus 0.8. Well, many estimates were looking for a sort of a flat number there. So again, encouraging signs on that German, economic performance, and that's obviously one of the driving forces of the EU bloc. Again, in Australia, the market performing reasonably well, economy is performing reasonably well, and it's just going to be very interesting to see how it sort of plays out over the next sort of 3 to 6 months. Because certainly the Reserve Bank of Australia has taken a slightly more sort of conservative, dovish approach in terms of its interest rate hikes. Now that doesn't mean there aren't further rate hikes in the pipeline, and certainly, we'd expect, maybe another sort of 75 basis point hikes over the next sort of 3 to 6 months. But by the fact of doing it sort of 25 basis points at a time, does give the market time to sort of digest those hikes, but also as well having to wait and sort of see what the impact is. Now here in New Zealand, some pretty good news from Fonterra. I'm looking for the sort of payout now. Mid price is around sort of $9. The range is sort of $8.50 to $9.50. Also an upgrade on guidance from New Zealand as well. Certainly air travel domestically is currently running at around sort of pre-COVID levels, if not slightly above. And sort of international travel is sort of really picking up all the time. But the major issue again is sort of labour shortage at Auckland International Airport, needing around sort of 400 to 500 workers in various sectors. So that's certainly a little bit of positive news. Maybe on the more sort of negative side, obviously you've still got pretty major issues with labour shortages. The government is sort of trying to address that with sort of temporary work visas coming through for overseas workers coming into the country. But as sort of discussed here before, that process still seems a little bit laborious and doesn't seem to be sort of filling those vacancies fast enough. And that's especially the case in hospitality, where obviously over the summer months you expect tourists to be coming here, but it's really hard to sort of have the tourists here if you can't look after them. You can't find places for them to stay. Restaurants, etc., are having to sort of work on reduced shifts because there's just not enough staff. And then to add to that issue, we've got rising sort of COVID cases. COVID cases now around just over 40,000. But the experts sort of believe that potentially only half are getting reported. So potentially you could be looking around 80,000 cases, and that's obviously having an impact on the workforce as well. Now potentially as well, we should get an announcement today on the fuel tax. The government obviously struggling in the polls with an election now in 2023, and that's really only sort of 11 months away now. They need to sort of get some good news out there. So, most analysts are expecting that to be, sort of extended now for at least a further 3 months. Because at present, certainly in New Zealand, inflation doesn't appear to be coming down. And also as well, obviously the government lost the recent by-election in Hamilton West. That was a further sort of pointer in terms of sort of popularity. And with that election now just 11 months away, it's really getting sort of crunch time. So certainly 2022 has been quite an interesting year. Obviously, sort of unprecedented hikes from central banks really globally. A huge labour shortage still. People talking about a recession, but a recession unlike we've sort of seen before. Potentially that hasn't arrived yet, and is sort of forecast maybe sort of early part of 2023. So we'd just like to wish everyone a very Merry Christmas and a Happy New Year from Bay Financial Partners. And we look forward to speaking to you again in 2023.